Hi guys, welcome to today's video. This video is going to be a super interesting video. You all know by now that since I started trading with CPR, I have not gone to any other indicator. It's the most accurate indicator in my opinion, and it gives the most accurate signals most of the time. So I don't trade on anything except for CPR and pivot points. I use daily pivots, I use weekly pivots, only the central pivot, and I use the central monthly pivot. By now you also know that I use only price action for taking my entries and taking my exits. It's the only thing I watch on the charts. I only go on price. Naked price is what I observe. I do not use any other indicators. Today I am sharing with you an important strategy that I use very regularly, and it's specific to Nifty and Bank Nifty again. I have not backtested this strategy on stocks, so I do not know how it plays out on stocks. Please backtest it and let me know how you find it on stocks if you are a stocks trader. This strategy is based on the relation between the previous day's CPR and the current day's CPR. So let's just discuss this first before I show you the strategy. Hear me out because this is an important step towards the strategy. Here you have to observe for what kind of CPR you have today in relation to the previous day. Let us talk about how to take long entries first. In long entries, we want to have an ascending CPR for today. So which means that today's CPR should be above the previous day CPR. And the previous day CPR preferably should be a wide CPR. It is not a compulsion, but the better it is for today's trade. Now, what is an ascending CPR? I will obviously be showing you all this on the charts, but for now, understand that an ascending CPR is when today's CPR is above the yesterday's CPR, and today's CPR should not be too wide. Today's CPR should be narrow to average sized. The opening candle has to break out of the previous day high range. That is a condition that you must follow. So the opening candle has to be above the CPR and it should break the previous day high in the very first candle itself. And when price goes up and the candle closes, it does not have to just go above the PDH, but it must close above the PDH. So the first condition is that the CPR of today has to be above the CPR of the previous day. The second condition is the wider the CPR of the previous day, the better. The third condition is today's CPR can be narrow to average sized, but it should not be very wide. And the fourth condition is that the opening candle itself has to be above the CPR and it should break the previous day high in the very first candle, the very first 5-minute candle I'm talking about. I always trade on the 5-minute candlestick time frame. If you have all these conditions met, then you can go long on the high of the first candle, or if the candle is too big, you can wait for a pullback also. If the price range is beyond your SL level, then wait and see if the price does pull back towards your SL level and then enter. Most often in my experience, the price has so much buying strength that it will rally, and then you can expect a 1:2 to 1:3 trade. This strategy can be used for selling also. I'll tell you how to use it in the selling. Again, the same principle. The first rule is that the previous day CPR should be a wide to average kind of a CPR, and today's CPR has to be below the previous day CPR. And when today's candle opens, it should be a red candle and it should also close as a red candle, and it should close below the previous day low. So it should close outside the previous day's range. In which case, if it does, you can short the first 5-minute candle itself and take a short trade, and then you can expect a good 1:2 to 1:3 kind of a trade. Remember that the important rule here is that CPR in this case should be a descending CPR. So today's CPR has to be below the previous day CPR. It should not be overlapping and it should not be above. The entire CPR range, I'm talking about the entire CPR range, should be below the previous day CPR. And the first candle has to close either below if you're talking about a short entry, or if you're talking about an ascending CPR, then in that case it should be above the CPR, but it has to be a candle close. Don't short or don't go long before the candle closes, just being overconfident that the candle is anyway going to close. So it's a very simple strategy. It will give you good risk reward trades, but you have to be very patient in the market. I'm telling you right now, this kind of a pattern does not occur every day, and you will have to be very patient. That's a very simple strategy. In explanatory terms, it's a very simple one. Maybe you find it a little bit complex right now, but once I show you on the charts, you will find it very easy to understand. Before we see the charts, if you haven't already subscribed to my channel, please subscribe to it. So let's jump in. You can see this is the Bank Nifty 5-minute chart. So you can see here, it's a 5-minute chart of Bank Nifty. And you can see that this is the previous day CPR. See, here we have the previous day CPR. And here we have the current day CPR. So you can see this CPR here. And today, that is the current day, the opening candle is above the previous day high. Now, where is the previous day high? I'll show you. This was the range and this is the previous day high. You can take an entry on the high of this particular green candle, but if you see that the next candle is not breaking the high of this first green candle, like in this case, the second candle has not broken the high, then at such times you will not initiate a trade till a candle breaks the high of that opening green candle. So let me explain this once again. See, this is the current day CPR. I'll write down the levels here. This is the previous day CPR, and you can see that the CPR is an ascending CPR. So this is the level and this is the difference between the two CPRs. Okay, and this is the PDH, the previous day high, and this first green candle here has opened above that range. The second candle here does not break the high of the first candle, so you wait for a candle to break above the high. Now here you don't have to wait for this candle to close. The moment this high is broken, you can take a long entry immediately when this high is, the first candle high is broken. And your SL should be at a safe zone. So here you can keep your SL, give it a little bit of distance, and you can keep your SL lower here. So here is your SL, and then you can take a 1:2 to 1:3 kind of a trade. Now here there was the R1 pivot. This one that you see is the monthly pivot. Okay, but as I said, monthly pivots, when the price has strength, does not hold any importance. It does not have much power to hold price. Then here this was the R2 pivot and this was the R3 pivot, and you can see that all three pivots were broken. So always keep a fixed SL level and a fixed target level. Don't keep waiting for the price to keep going on. Price can reverse anytime. So if this is your SL, if you can enter here and this is your SL, then your target should be at least twice of it or thrice of it. 1:2 to 1:3 is a good ratio in this strategy. Now take a look at this chart. This is Nifty and again a 5-minute chart. You can see here, I'll mark the previous day CPR. This is the previous day CPR here, and this here is the current day CPR. That is the day on which you want to trade. Okay, now here you see that this first candle is a strong bullish candle here. This happens to be the high of this candle. This is the low. You can see that this is the previous day high and the first candle has broken that level. So now here this candle is very big. So ideally you can wait for a 50% pullback also. So that is a good idea to wait for a 50% pullback. And here you could see that the second candle, or rather the third candle, did have this wick here which came to nearly 50% of that candle. So you can enter on that candle It's fine to keep your SL at this level here. It does happen to be a big SL, so you can reduce your lot size here, and this is your SL. And if that's your SL, then if the SL is big, then your reward should also be big. But in this strategy you do get good reward, so you can keep a bigger reward here and target at least 1:2 or 1:2.5 or 1:3. So it's a very simple strategy, very simple to understand. You just have to see that the CPR of the current day has to be higher than the CPR of the previous day. So here the price again in this example has broken the R1 pivot, the R2 pivot also, and here it has broken the R3 pivot also. That's how strong these rallies can be. Pivot that you see here is the weekly pivot, but as I said in the previous example also, weekly and monthly pivots are not as powerful as daily pivots anyway, so you can ignore those. Now here's Bank Nifty on a 5-minute time frame, and let me mark out the CPR for you. This is the previous day CPR, and this is the current day CPR, the day on which you want to initiate the trade. So here you can see again the same thing happening. Let's mark the high and low of the first opening candle. This is the high and this is the low, and now you can see again a very big bullish candle. But since you have the PDH at this level here, the previous day high, this is going to act as a strong support, so you can keep your SL below the PDH, give it some room. You can have SL here below it. Your entry can be here, or you can, as I said, wait for a small pullback also, that is also okay. So after that you can take your reward at 1:2 or 1:3. So that is how you should be trading this strategy. It's a very simple strategy and it gives you good risk reward most of the times. This first candle shows that there is a lot of buying strength. It has broken the R1 pivot in the very first candle, then R2 pivot immediately after that, and it has also broken the R3 pivot here. So you can go back and backtest all of this on the charts and you can see for yourself. Let's take a look at Bank Nifty now. This is an example of a short trade. Let's mark the previous day CPR. This is the previous day CPR, and then you have seen that most often Bank Nifty was trading in this zone the entire time till this candle broke down, but then that breakout wasn't so extensive, and then again it formed a range here. So this was a kind of a sideways day. Most often you will find that the previous day to this kind of a rally will be a sideways day. Always ensure that you don't take this kind of an entry on any days on which the previous day has also either crashed or rallied to the upside. So coming back to this example, now the current day CPR is here, and this is the first red candle that has broken out of the previous day low, and now your entry should be on the low of this candle. Your SL can be above here. This is your SL, and again you can take your profit back at 1:2 or 1:3. Now here again you can see that this is S1, this is S2, and this is S3. These are all daily pivots. All the blue lines that you see marked are daily pivots. All those daily pivots have been broken. They're important pivots and yet they are broken. So you can see the kind of strength that price has when it breaks out of the previous day range in the very first candle, and when the CPR is a descending CPR like this. So these are the conditions that need to be matched, and always ensure that you keep a fixed risk to reward ratio. That will make sure that you lose small and you win big. So guys, there you saw it, a very simple strategy. Doesn't take much. You just have to observe the rules of this strategy. Just ensure that you enter with a good risk reward, and that's all you need. If you enter with a good risk reward, then you don't need to worry. Even if the trade reverses, you're taking your SL, and taking your SL is a very important thing. You have to have the quality and the ability to take your SL. If you can take your SL well, if you can take your SL quickly, you can cut your losses quickly, then profits will come automatically. You don't need to do anything about it. So always remember, cut your losing trades quickly and let your winners do all the profit booking for you. So there you have it. If you like this video, please definitely hit the like button and also subscribe to my channel if you haven't already. Hit the bell icon so you're notified whenever I post a new video, and please also share this video with your friends and family. Thank you for watching. I'll see you in the next one.